important to do is that, as a fund manager, as the founder of that fund, you're running the game clock, you're running the game. So the moment that you say, hey, I'm fundraising, and you give any signal of that to the outside world, which includes these collaborative conversations, the clock has started.
In case anyone obviously doesn't know about you, do you want to just give a quick background on what you're up to and who you are, and a little bit about what you're doing?
Yeah, happy to. So my name is Mia. I'm an operating principal and first full-time team member at Four Cities Capital. We're an early stage firm investing in seed and Series A startups. Prior to that, I was chief of staff to a Boston-based VC, to one of the co-founding partners, helping with portfolio management, investor relations, and fundraising. And it was at that firm that I really started my career in venture, with not only that role, but various internships on the, investment and platform teams. So super excited to have started my early career in venture and, learn along the way.
It's cool. I think there's definitely a lot of stuff to sort of do in venture. And you wrote in a Medium article that was kind of interesting. It really stuck out to me, and I think it got a lot of interest on social. And I think it was all about fundraising for a fund. Obviously, it's very different from fundraising for a company. I think there's a few similarities here and there, but it would be interesting to learn a bit more about why you decided to write that Medium article, and what was your purpose? Why did you do it? What was the incentive? What was the instigator in writing something like that? Because I thought it was very useful. I think there's a lot of people that found that useful. But do you want to just sort of explain what the article, the series of articles were about on Medium? And I'll link that in the description notes below. But it would be good to sort of get your story behind why you decided to write that.
Yeah, definitely. Well, one of the great outcomes of that article was getting to meet you and being able to do this podcast. So it has introduced me to a lot of great people, yourself included. But, just to up-level, share a bit about the series. I'm writing a blog post series on fundraising as an emerging manager, broken down into a few separate blog posts. The two that have been published to date is all about how to source and connect with LPs. The second is managing a pipeline of your LPs. The third that is up and coming is what materials to prepare for your LPs. And then throughout this series, speaking with a few LPs themselves to do LP spotlights, as I'm calling them, to really bring in the second perspective of the LP, given that my perspective and the one shared to date is from the VC side. So that's at a high level what the blog series is about. And, to answer the question of what prompted me to write this series, the short answer is that this series is an evolution of my chicken scratch notes of one-on-one coffee chats that I've had with various emerging managers, by simply reaching out to them and, being very transparent that I have no idea what I'm doing. Here are all my questions. Can you help me? And so, like I said, fundraising for a venture fund was, something that I knew very little about, but I was given the opportunity to, play a pretty large role in it in my last fund. And being so early on in my career, I was fine saying I don't know what I don't know. And I've had the opportunity to work closely with those who have, and then also develop a network and community of others who have successfully raised their funds. So reached into my network, reached into friends of friends, and, asked for these coffee chats that then evolved to wanting to write this series and kind of publish and promote the tips that they were sharing with me. And, by no means gatekeep those tips, but, amplify them to the world so we can all learn together in the open.
Yeah, I think that article really stuck out because you really broke down exactly what that process looks like. And so for anyone who doesn't understand, or maybe who's someone who's just like raising their first fund, thinking about going into VC and learning about the fundraising process, but also those who are sort of just VC enthusiasts, they want to say, okay, how does like a Sequoia become a Sequoia? How do you actually raise money to become a fully fledged fund that you can start to invest in early stage companies and so on and so forth? Do you want to quickly just break down what that fundraising process, everything from like sourcing the LPs, getting connected to the right LPs, maintaining those LPs and those connections, it'd be good to sort of take sort of a high level snapshot of the Medium article you wrote and sort of explain that in this episode about how you would go about if you was just starting out for the first time, and what really are those key insights that you need to gain in order to start thinking about fundraising the proper way?
Yeah, it's a good question. And we could spend this podcast and many others talking about the entire process. So I'll try to do the TLDR of the post that I've published to date. But I think prior to going into the post, one thing that fund managers always shared with me prior to the questions I asked with them was, I'll answer your questions, Mia, but let's focus on like what I did before I even went out to go to market, before I even went out to go start asking people for money. And so I think I'll start there, and then I'll give like kind of snapshots of the posts that I've published to date, if that works for you. But you're a first time fund manager, you're going out to market. What do you do before you start fundraising? There's a whole checklist. And I think it's important that we get transparent about it. And so, to summarize that into I'd say 4 points, the first and foremost is that I think it's really important to understand the concept of venture math, and that it's very hard to, generate these outside returns that are venture worthy and are what excite LPs, and understand that to start a venture fund and have a successful one, it takes a lot of discipline and honestly a little luck to be successful. And so while many of us know this, Barry, you included, prior to starting Metagrow Ventures, I'm sure, it's a common response when I ask emerging managers, what was your biggest doubt or biggest fear when you were starting a venture fund? They were like, the math. It's very hard to be successful. I need to have a lot of at-bats. I need to hit home runs just to generate a 1x on the fund, let alone a 3, 5, 7x like I'm promising prospective LPs. So I think just laying out the foundation of venture math and getting familiar with the concept is really important prior to going out to market, because that's what you're pitching you're going to be able to do. And then the second fund is, spending a lot of time crafting a differentiated story and building a financial model alongside that story. So, first-time fund managers need to spend a lot of time explaining to LPs what their investment strategy is, why it's unique, why they're the best individual to execute it. And then the financial model needs to go alongside that to outline how said strategy will actually drive outside returns for the LPs that they're pitching. So, for example, your financial model should include how many investments will you invest out of your fund? What's your average check size? What are you reserving for follow-on capital? How are you thinking about recycling capital versus distributing it upon realized investments, and so forth? And so I think if you skip that step, or any of these steps that I'm about to share, you'll be going out to market before you're truly ready and before you truly know yourself. And in the spirit of knowing yourself, it's also very important to know your prospective LP archetype, which leads me to my third point, which is you need to spend time building your ideal LP archetype. Very similar to how founders of startups build their ICP, their ideal customer profile. What's your ideal LP profile? LPs vary from high net worth individuals to family offices to fund of funds, institutional endowments, sovereign wealth funds, and so forth. Your fund one, are you going to go out and target the sovereign wealth funds of the world? Likely not, but kudos if you do. And so I think it's important to understand, who are you targeting and why? Are you the fund manager that is going to be the bridge for high net worth individuals who are just starting to dip their toes into venture capital as an asset class? And are you ready to bring the level of education likely required to get those LPs comfortable to invest? Or are you the LP that's going to help an endowment just building out their foundation for VC and be their first VC investment? Or are you going to go to a family office who is, well known with VC, have a few investments and some co-investors that you've been, looking at deal flows with, et cetera, and, go that route? So I think it's really important to spend time knowing who you want to raise money from and why, and that'll result in a very narrow and targeted outreach that you can do. And then the fourth and final piece, and this kind of goes into right when you step your toes into the market, but before you go out to market and start pitching, start asking for money, I think it's a very tactical and strategic way that you can go about it. And instead of going out and asking for money right away, you can go out and ask to collaborate with prospective LPs. And so this is, the style of approaching an initial conversation from a place of wanting to get feedback as opposed to wanting to ask for money. And arguably it's still just as difficult of an ask. You're asking someone actually for the most precious asset, which is their time, let alone their money. And so you're asking for 30 minutes or an hour to sit down, talk through your investment strategy, see if it resonates with them, see if, the language you can tweak the language at all to, make the message come across clear, get gut check on the materials that you've prepared, ask them if they know anyone else that you should talk to collaborate with, all with the intention that they feel like they're part of your journey, where if and when it makes sense, they might lean in and want to invest as well. Again, not with a direct ask, because no one likes to be sold to, although at the end of the day, you're always selling, but from a more collaborative standpoint, if that makes sense.
So how long, like if you're someone who wants to, like, in the back of your mind, is like, look, I really want to work with this LP, but I don't want to be too needy and ask them very straight up. When is that right time? Because if you're trying to collaborate with them, I think that's really great. And you want to make sure that they become more active than passive as an LP. But when is at that time? Is it like, when is it an inexact science when you figure out, okay, maybe it feels right that I should now maybe ask him or her to sort of thinking about investing in the fund? Or, do you just straight up say it and then look, after a couple of weeks, after 2 weeks, what is the strategy there?
Yeah, it's the magic question. I wish it was an easy answer. Like you talk to someone 3 times and then after 3 times, you can ask them for their money. It's not black or white. It's clear as mud, in fact. So I think it's a difficult one to address, but you bring up a good theme, which is, how do you generate momentum while fundraising? How can you continue on conversations while not feeling like a buzzy bee at the back of the LPs, constantly following up with them, and you perhaps sometimes getting limited response, which is going to happen to the best of us. So I think what's important to do is that, as a fund manager, as the founder of that fund, you're running the game clock, you're running the game. So the moment that you say, hey, I'm fundraising, and you give any signal of that to the outside world, which includes these collaborative conversations, the clock has started. And so you're the coach, you're the player, you determine how long you want to run that clock for. We can talk about like average times it takes to raise a fund. And of course, that's only lengthening now due to the market conditions. But I wish I had a clear answer for you. But unfortunately, it's kind of a sense and feel, and every individual relationship is different. But I can say that if you clearly run the clock with each of your LPs, as soon as one dips in, you can kind of start this feeling of a snowball, and then the momentum will carry other LPs forward, and you can kind of nudge folks along by saying, I want to keep this friends and family, close friends. Here's the update on how much we've closed to date. Would love to include you in that group. Are you interested? A month later or so, they haven't responded. Hey, understand that, we're all busy, but just want to check in. Haven't heard from you for a while. Going to assume that you're not interested in the opportunity and respectively take you off the list to be respectful to both of our times. Let me know if something changes on your end, in hope of them following up. But like I said, it's important to follow up with LPs, but you don't want to chase at a detriment of your own time, if that makes sense.
No, that makes complete sense. And I agree with you. It's always tough to figure out because every LP is different. It's not like you can just treat them all the same and just send a blanket email to all the LPs within your network. Everyone has different needs. Everyone figures out what their sort of sweet spot is. So you really have to treat every LP like as the only specific LP that you're really focused on. And that obviously can be time consuming because if you're dealing with potentially 100 LPs, then you're going to have to really maintain those strong relationships. And I think that ties in with the momentum side of things as well, because I think with the momentum, you really have to really create that sense of like urgency, as you mentioned, and that FOMO effect. But I like the way that you said that you have to really put a deadline on it or a time frame to say, because if it becomes more open, then you're just giving them the ability to sort of come in when they need to. And that doesn't bode well for both sides. So I think time frame, urgency, and making sure that there's some level of commitment there, whether it be soft, at least you have something verbal. Is that important to get a soft commitment from them?
I think yes and no. I think people indicate soft commitments in different ways. I wouldn't be turned off if you didn't get a soft commitment of like, I'm interested in 100K or 5 million with a dollar amount associated to it. However, I think that you can see soft commitments by them offering to continue to spend time with you, or by introducing you to some of their friends or people that they know to have conversations with so you can get other people's feedback. I think soft interest can be shown in different ways outside of a dollar commitment. And so I think using your best judgment to, nail on that. And then just going back to another thing that you said about, fundraising can take a lot of time. And if you have 100 or so LPs in the pipeline, what's someone to do with only 24 hours a day, and how can they manage that all? And I think that goes back to the importance of having an ICP, an ideal customer profile for your LP. So let's make the analogy, which many do, that fundraising is a lot like sales. And you're selling at the same time, you're trying to get new leads. You're like a BDR, but you're also an account manager. You're trying to keep your existing LPs or those further along in the pipe very happy and make the experience feel very personalized. And so if you have 100 LPs in the pipeline, or the more you have, the harder it gets. And so that's why I think it's so important to spend the time up front to craft who are you truly targeting and who will resonate most with your pitch. And so I'm double clicking on this, or clicking on it a few times, because I think the importance of spending the time up front to understand what your story is and who it'll resonate with will only give, great benefits later on when you're with a specific curated list of LPs that you can truly personalize each and every experience, and you're not overextended with your bandwidth.
Yeah, no, I agree. There's one thing where you're sort of just spraying and praying, and you're trying to contact everyone, which can work in many cases. Obviously, if you have a very, very strong track record, that might work. But especially if you are starting out as a fund manager and you don't really have a strong track record behind you, you really need to cater your mandate and your thesis to specific LPs, as you mentioned. And I guess that sort of segues into the next question is, how do you go about that? Like, is it, you mentioned reaching out to LPs is always an activity, an exercise in and of itself. Now, there's warm connections and there's cold connections. So it would be interesting to get your thoughts about sort of when you should approach on both sides. Some fund managers that I engage with, they never touch cold contacts because it leads to a dead end. On the other side, there's always that possibility, especially again, if you have a track record, I think it does bode well. But as just going back to the perspective of an emerging fund manager, what is sort of a good approach to interacting with LPs, both warm and cold, if any?
So I think my advice there would be to prioritize and almost exhaust your warm connections prior to going to cold connections. Not that the latter can't be fruitful, and we'll discuss that, but I think to best manage your time and your energy, prioritizing warm connections is important. And so I think the process of leveraging those warm connections is, we can talk through it in a few steps, but I think that, first identify, who you might know in the industry that is venture capital, entrepreneurs within your portfolio, co-investors that you've done deals with, friends who are at other funds and so forth. And then take a look at various funds. If they're at a VC, take a look at, have they closed a fund in the last 18 months? If so, they probably have advice on the overall fundraising strategy. So, perhaps grab a coffee and chit chat with them. And again, at least my style is that, don't come so direct with your ask, to ask for an introduction to their LPs, because again, there can be many layers to this dynamic. You don't want to come across as potentially a competitive investment to them and, lose a great co-investor relationship. And so I think approaching it as another learning opportunity of, hey, you were just in the market fundraising, I'm about to go out to market. What advice do you have? Oh, you just closed a fund in the last 12 months. Are there any LPs that, perhaps you think would resonate with our story as well? And so I think where you can do that is with co-investors, but specifically lead investors who follow on in your portfolio companies. So say you invest specifically in seed stage companies. Look at the companies who have, your portfolio companies who have graduated on to Series A. What investors led this Series A? Have you developed a relationship with them? Can you proactively develop a relationship with them in hopes of one day, as you approach going out to market, saying, hey, we fed you, or you followed on with X percentage of our portfolio companies, be super neat to, kind of develop this seed feeder relationship, or any of your LPs perhaps interested in, getting to know a seed stage manager as they focus and prioritize you for the Series A opportunities. And so I think you can play it that way. And that's one path to a warm connection. Others include, like I said, portfolio companies. So entrepreneurs in your portfolio who might be working with other venture funds, asking them for introductions to other managers that they've really enjoyed working with, and then playing that same route with said managers in hope of getting an introduction to their LP base as well.
Yeah, I mean, that's, there's always so many strategies, and I agree with all of what you just said. And I think the one thing is doing the work, right? And it's so easy to sort of plan it out on paper, but then you have to realize how to sort of manage those relationships, reaching out to the right people. And it does get old sometimes, and I empathize with a lot of fund managers out there. But once you get traction, though, it is fun because you start to realize that, wow, this is actually starting to work now. There's a lot of interested people who want to learn more about our mandate, and this is going to make a huge difference to what we're building as a fund, but also the impact that we can have on the sort of investors as on the founders that we work with as well. One thing that I've noticed that can be sometimes troublesome for managers is maintaining a very big list of LPs. They use spreadsheets, they use probably, Airtable or Notion or some sort of CRM system on their side. Some even probably, do it on paper. That might be a thing that I'm sure that happened, decades ago. So what's the best approach, if there is any, about sort of keeping an organized list of LPs in your network? What tools should you use? How should you go about that? What are some of your recommendations?
Yeah, well, you named a few tools there. There's tools like Airtable, Monday.com, there's Gmail extension, there's the good old pen and paper. But what I'll recommend, and I'm extremely biased for recommending this because I'm a fan favorite customers of theirs, is there's a tool called Affinity. It's actually a startup itself. I think they just closed their Series C, a few years back. But they are dedicated customer CRM specifically for VCs. And so not only can you use it for fundraising support and limited partner support, but you can also use it to manage your deal flow and portfolio companies as well. For this conversation, in this use case, I actually use them at my prior fund for for all things, but what I was managing was the LP relationship side of things. And so I talk about this in my second blog post, if we can link it in the chat, and I provide some screenshot examples. But what was really helpful for me was to actually build out a Kanban board with various steps, various pipeline stages. In the blog, again, it shows examples of live stages that you can have in your pipeline with specific definitions of what needs to be true for an LP opportunity to be in said stage, what the gate is to go into the next stage. And I think having a very clear process that is still flexible for unique cases, because like we both agree on, each LP is, different in the diligence and difference in the style. But I think an overall structured process can be very helpful because it keeps you organized, because you're going to be managing a lot. Fundraising, sales, it's a full-time job. Fund managers are doing this in addition to their day job of investing, which is what they're probably likely more passionate about. So you have to stay organized and stay disciplined to the best of your ability to keep the clock moving as you run the clock. And so Affinity is one of those tools that you can use to do that, in addition to any other CRM tools as well.
Yeah, I think the managing side is key. I think from my experience as well, I started out sort of just doing on Google spreadsheets, and then I realized that it was, untenable. So I felt that, having a structure in place right from the beginning definitely helps in sort of building out, especially when, 10 LPs or whatever it may be, kind of seems kind of easy. But with everything, if you have processes and structure around you, as you start to scale and you get more LPs coming into your network, then things like Affinity or Airtable, all of these other tools are great for that, because you really are defining some sort of foundation for that. So whenever you contact an LP or an LP reaches out to you, you go straight to the table or to the CRM, and then you put their details in, you put down the type of engagement you've had, and then that's it. And as long as you're consistent and disciplined about that approach, then I think everything will fall into place. And then you can easily go back retrospectively and look at, who are you engaged with, who haven't you engaged with in such a long time that you need to reach out again, right? And so I think that's sort of advice from both of us about, if you are an emerging fund manager, to really thinking about having good core foundational processes right from the beginning, because it can get pretty ugly very quickly if you don't manage that. That's great. I think. Yeah, I know. So I think the entire fundraising process is really interesting in and of itself. So, I'd like to understand a little bit about sort of the differences, Bertho, because I'm sure there's a lot of founders listening to this as well. They're probably into learning a bit more about, that's how VC raises their money. But how does it relate to fundraising for a company? And, are there similarities? Are there differences? What's the difference between the two?
So I'd be really curious if there are startup founders listening to this, they want to leave a comment or follow up afterwards with either Barry or myself. Would love to hear their feedback on what the differences they are, or similarities and differences that they're observing. But, from speaking with portfolio companies and speaking with friends who are founders, I think my hypothesis that, some similarities, there are a lot of similarities, and those include, the importance of leveraging your personal network for first meetings. We just talked about the importance of warm connections and how you can go about that as a fund manager. And there's very similar routes as a founder looking to other founders for VC introductions. I think the second similarity is that, there's this big necessity to prepare a strong pitch as to why your venture is unique and why you're the right one to build it. Very similar to VCs going out to LPs in a crowded marketplace of, hey, I'm another seed stage manager, but oh no, wait, I'm different than everyone else because of this, and here's why I'm the best to do it. And so, there's that pick the best jockey analogy that's applicable to both startups raising from VCs and VCs raising from LPs. And then I think the third similarity is that this is with the exception of first-time managers, but more so emerging managers, there's a likelihood that you'll rely heavily on your existing investors or your board members to help you raise your next fund. And so if you're, at a startup, you might be, relying heavily on your inner circle of investors to make introductions to new investors as they've been, pleased with your progress to date. And I've seen similar trends in the VC world as well. Many VCs have what is called an LPAC, a limited partner advisory committee, which is an inner circle, if we want to call it that, an inner circle of existing LPs that they rely on specifically for board advice. And so whether they're on the LPAC or they're, a close colleague or friend within the limited partner group, relying on that inner circle to help give feedback and provide introductions as you go out to market again. And then, I think the similarity, if you're hearing a consistent theme here, is that the overall fundraising process is quite similar. You have your first meeting, you have your first meeting, you share some materials, you open up the data room, you have your diligence, you complete your reference calls, and you hope to close. And so that overall sales process is very similar from startups to VCs to LPs. The materials that you're sharing, the metrics that you're measured on might vary, and, the investor base varies, but the overall theme is the same. And so I've had a lot of fun, raising funds in tandem when startups are pitching us for investments. The parallels are just, quite clear sometimes.
I think there's definitely a lot of similarities there, and I agree. And I've raised funds for companies in the past, and it's definitely very similar in the sense that you do have to have a pitch, you have to have your own mandate, and your mandate is effectively your product. What are you building that's going to solve the problem? I think the difference would be going to the different respective parties. You probably wouldn't be going to institutional funds directly unless you have those strong relationships to raise money. You would be going to a VC, and then the VC would get the money from the institutionals or from them to fundraise that round. So I think it's the party that you go to that will be the biggest difference that will fund the round at the end of the day. And I think for a lot of founders, that's kind of interesting information, I would say. I think there's a lot of founders who are still unbeknownst to the idea of, look, I need to raise from VC, but how does VC get their money? And so I think it's a very dynamic environment. Even I would say founders can become LPs in funds, especially if you have a strong connection to a founder that you've invested in the past and they've done a pretty good exit. A bit of allocation from the founder itself would go a long way into as an LP into a fund, because they are sort of reciprocating, and you've invested and you believed in them as a founder, as a fund, but now the founder has done well and got an exit, and then sort of repatriating that back into to the fund. So it's very bidirectional. It can get very, very tricky, but it's also nice that you build a strong network of people around you as well. And I think that's what it's all about at the end of the day.
Well, there's a lot of players in the game, but it's very interconnected. And you shared the example of, founders themselves being able to engage and invest in VC funds if they're financially able to. But it goes both ways on the LP side as well. On the LP landscape, we're seeing a lot of more LPs do direct investments into startups themselves, whether it's through an existing manager that has a relationship or via a prospective manager as a way to build a relationship with them and complete due diligence. There's a lot of players and there's a lot of interconnectivity, like I said.
I think that's exactly right. Before we sort of get into sort of Four Cities, because I do want to learn more a bit about what you're doing there, I want to quickly just go back to the notion of connecting with the LPs. And you mentioned sovereign wealth funds. You mentioned, we just spoke about institutional, and there's also a class of like high net worth individuals or people who who are able to become accredited and invest in funds. Now, I guess the question is, what should be your archetype LP if you are an emerging fund manager? I probably already know the answer to this, but it would be great to sort of see, the perspectives, but also help people and sort of emerging fund managers themselves learn a bit more about, like, where should I spend my energy? Because I think going to the wrong LPs is the wrong way to go about it. So what would be the type of LPs you would target, as you are raising your first time fund?
Yeah, well, it's a really good question. It was one I was very curious about as well, so much so that I actually completed my senior capstone on this very topic while a senior at university. And the output of that capstone was that it's primarily high net worth individuals and family offices that invest in first-time funds and emerging managers. Now, that was the output of my capstone from research on PitchBook and Preqin and lots of data reports. But as I've now started having coffee chats with emerging managers and first-time fund managers, I think I put an asterisk by that answer. While it is primarily high net worth individuals and family offices who have the risk appetite to invest in a manager who is early on in their fund life cycle due to a personal relationship, there are many instances where there are nuances, where a fund manager could be spinning out of another fund where they were a GP for, say, let's say a decade, and they built out a strong track record for themselves, and they developed relationships with LPs in that other fund, and they had decided to go and spin out and start their own fund. And we see this a lot, experienced managers spin off and start a solo GP fund. Well, that manager who've developed relationships with LPs at that prior fund, who, has a strong track record, who has gotten to know LPs over numerous fund cycles while there, might bring that relationship over to its new fund. And so I think that could be an exception when an institutional LP comes into the conversation for a first time or emerging fund manager. As I complete these LP spotlights, and I'll link them back as they're posted, I've spoken with two LPs, one which is an institutional LP based in Boston. They back first-time fund managers in that same example, spinning off from an existing manager and who they've developed a relationship like, and think they're targeting a new strategy that fits well into the portfolio construction. Another LP I've just recently spoke with is actually a fund of funds, and they have a really interesting portfolio construction where they dedicate, let's say, 10% of the overall fund size specifically to what they call nano funds, which are small emerging managers, with the whole thesis that this category of first time and new managers is being overlooked by institutional LPs due to the nature of the smaller fund size, when in reality, this can be a really great, source of talent and new capital being deployed into startups that perhaps, are being overlooked. And so while my thesis output was high net worth individuals and family offices, which I still do believe is the case, I think I would add that asterisk now that it does depend where the manager is coming from.
Yeah, couldn't agree with you more. I mean, that's definitely, again, I think every GP or potential emerging fund manager is unique. And I think we want to just sort of make it very clear that if you're an emerging fund manager, it doesn't necessarily mean you're running your fund for the very first time. You have come from it may be the case that you've come from a previous fund, and you've done work there, but you have these very, very strong relationships around you, and those relationships will then bolster you to really develop the fund that you want to create on your level and work with a new fund in that respect. So I think that was good to sort of learn a bit more about how to reach out to the right people in the right capacity as well.
Yeah. And I think on your point with emerging managers, like the definition of emerging managers that you're investing out of your third fund or fewer. So you're either investing out of your first, second, or third fund. And why it's deemed as an emerging manager is that if you think about it, the average life cycle of a VC fund is 10 years. Say your vintage fund is 2020 for fund one. You're out, deploying capital for the next 18 to 24 months before you dip into your reserves and you raise fund two. Then the same cycle repeats for fund three. And when you raise fund three, say, you have another 18 to 24 months of deploying capital, then you go out to fund four. That's when you come out of this category as an emerging manager. Well, you're still technically within the first 10 years of the fund cycle for the first fund. And so why that's important to define is that with that average life cycle of the first fund being 10 years, there's not this impeding expectation from LPs that you have distributions within that first 10 years. Those slowly trickle in 5-7 years in, and sooner if you hit a home run and you're doing well for yourself. But that's why they're called emerging managers, because you're emerging, you're still playing the game, you're getting settled, and you're early in your career. So I think that's the clear differentiation to be made there.
Yep, well said. Let's quickly go into 4 cities. You mentioned at the beginning of the conversation. Tell us about 4 cities. What's the mandate? What's the story behind the firm? And we'd love for people to sort of learn a bit more about what you're doing, some of the companies you're working with at the moment, and we can go from there.
Yeah, definitely. Well, so 4 cities. I joined the firm about 10 months ago now, and it was founded back in 2015, founded by founders and operators themselves who have remained building their endeavors full time since starting 4 Cities Capital. So that's to say that the team composition of 4 Cities is quite unique. We're both general partners are part-time, and we also have a part-time fund advisor, and then there's myself who's full-time on the fund. So we're a small but mighty crew over here. But the whole thesis was that, there's that theory that it takes a great player in order to be able to coach the game. And these GPs who I'm able to have the opportunity to work alongside, are great coaches, but they're not done playing the game yet. They still want to build. They still want to operate. And so they've built 4 cities alongside them in their career, grown alongside it, and have been investing in other entrepreneurs while still building and operating themselves. And I think that's what really excited me to join 4 cities, is that model of founders and builders, investing in founders and builders. And I thought, many VCs say that. They have been operators before and they relate to your experience, but was that 5 years ago? Was that 10 years ago? Or was that literally the same day that they call you? Because for these GPs, it is. And so that's what excited me about 4 Cities.
Yeah, 4 Cities is interesting because it is, managed by 2 part-time GPs that are doing company building on the side. And they're sort of like deep operators, and they've been able to sort of manage between and do a balancing act between both investors, but then also operators as well. And I think that's important, not in the sense of the balancing act, but the fact that a lot of these GPs at 4 Cities are operators themselves. They've worked at companies, so they understand a lot about, how to work with founders. And, I think founder friendly can sound a bit cliche sometimes, but, especially if you are going to work with a VC, you definitely want to make sure they understand the craft of building a company. It's very, very tough. So we definitely empathize with the founders from that respect. And I think from our side, I think Metagrove we're sort of community driven. We have a lot of people that are operators, me being myself an operator as well. So we definitely understand the highs and lows of building really great companies. And I think that sort of leads into sort of the question about Four Cities, that you joined them because you believed in their mission. And so what's sort of keeping you busy day to day now at Four Cities? Are you sort of mostly focused on investor relations, and where do you want to go as well, in Four Cities and beyond as well?
Yeah, it's a good question. Well, I started talking about what excited me about Four Cities, specifically, their approach to founders and how they live and breathe what they say. But what also excited me is that despite being founded in, 2015, almost 10 years ago now, and building a great track record throughout the year, there was a big opportunity at Four Cities to help build the foundation of the firm structure. And so, coming from my previous role where I had the opportunity to shadow one of the co-founding partners of the firm and see what it was like to manage and lead a venture fund, Four Cities gives me opportunity to actually execute and do that. And so when I joined Four Cities, I saw a pretty much blank sheet of paper in terms of the operations and structure of the fund, and the opportunity to help, build that foundation and also shift strategy as we look towards this fund and, future funds, and being able to play and have a big voice in that. And so that's what excited me to join Four Cities. In terms of day to day, when there's only 4 team members and one of those folks are full time, you're doing a little bit of everything, wearing many hats. And that's one of the reasons I enjoy it so much. So, some days I might be handling LP communications. The others I might be thinking about, portfolio construction and what, when our next capital call is going to be. Other times I might be speaking with a few portfolio companies, helping them hire, the next key hires that they shared in their monthly investor update and so forth. Other days I'm working on the blog, which I'm super happy to be doing. So it's a big bundle of things. And that's, how I prefer to spend my time, jumping between many different tasks. And when I think about what I want to do next, I want to help keep growing Four Cities. Like I said, we're our 5th fund in, but there's a lot of blank space that's still yet to grow. And I think all team members' ambitions are high, and we're just ready to keep working and keep executing at it.
Yeah, that sounds cool. I think that I do want to get into sort of why you decided to get into VC. I think this is going to help a lot of other people, sort of, especially those out of college or those who are sort of interested in building companies and helping with founders, what that looks like. But sort of before we get into that, do you want to just clarify the mandate for Four Cities? Does it have a mandate? And how do founders sort of reach out to Four Cities if they want to connect with you?
Yeah, definitely. So our overall thesis, we're generalist investors. We write 100K to 300K checks into seed Series A startups, primarily in the United States, but we have some investments abroad. Best way to reach out to us is you can go to our website. We have an email contact there. I'll also share my personal work email with Barry, so you can include in any promotions of this podcast. But that's a little bit about how you can get in touch with us and what we look at.
Cool. Yeah, so let's quickly get into, I think, sort of as we sort of tail off, because I think this is going to be interesting for a lot of really budding venture capitalists out there, but also founders and people, enthusiasts who want to learn more about getting into VC. I've spoken to a lot of people at university and college who are kind of interested. They don't know too much about it. I guess what they've heard is sort of just subscribing to newsletters, reading blogs from a lot of the VC firms sort of around. But what was your story? How did you sort of get into, VC? If it was ever the first option, you don't really study VC. There's no degree studying venture capital in college. So what was your quick backstory into sort of getting to this space?
Yeah, quick backstory was I thought I was going to go into the medical field. My whole family, doctors, nurses, and so forth. So thought that was what I was going to do. Took a science class, took math, and thought, nope, not for me. Switched to marketing actually while studying in college. Ultimately ended up in finance. But I think we talked about whether you should do warm outreach or cold outreach when going to prospective LPs or investors. And I actually landed my first role in a VC through cold outreach. I was looking for a summer internship. I just switched my major from marketing to finance. I was like, what am I going to do? I need a summer internship. I need to actually experience this, this field of study that I just opted into. And so I reached out cold still for a marketing community role at that Boston-based fund that I since grew alongside and joined as chief of staff upon graduation, but joined them for the summer that extended into the fall. I helped out with their portfolio companies. And it was primarily on the, platform side, marketing community. It was what I knew, is what I was comfortable with. But I remember there being these Monday meetings with the investment team members and the investment partners where they would go behind a door literally into a side office and talk about all the companies they were meeting that week. And, maybe it was just me not wanting to be left out of a closed door or, interested in what they were talking about. But I was like, I need to get behind that door. And so I looked for my next internship and actually ended up self-developing an internship with that same firm to join the investment team. And then I was behind the door. I was a part of those conversations, learning about, what companies they were looking at, what questions they were asking, so forth, and had a lot of fun with that. So I was mostly doing sourcing and due diligence, and then I started approaching graduation and I thought, well, what do I want to do? I know I really like VC. Do I want to stay on the investment side? Do I want to go back to platform? And made it the best of both worlds by self-developing another role at the same firm as chief of staff. And so that was kind of what I shared earlier, was encompassing everything along the firm, but shadowing specifically one partner. So everything from his portfolio management to investor relations to fundraising to, firm operations as a whole. And so that was my side door story into VC. I think ultimately what got me excited what got me excited to stay and continue wanting to learn more is that it is the best place to be if you're curious. Like if you want to know about something that you know nothing about and you want to learn about it from one of the most passionate and smart people working in the space, like you get to learn from someone every single day. You're rarely going to be the smartest person in the room, which I think is a good thing. And you get to learn constantly. And so I think that hungerness to learn and the curiosity to learn, if you have either of those two things, you might want to consider VC because it'll continuously feed your brain. And I'm very lucky to be where I am.
That's a great story. And I think a lot of people don't really appreciate the value of sort of learning. And I think the whole notion of VC is trying to learn from each other, also learning from the founders, but also learning about the future as well, because it is sort of figuring out how do you want to, what's going to take off? What are these trends that you're seeing, right? And so no one has the precise answer yet, but it's all about putting the time and effort into trying to support the founders who want to become and who want to disrupt and change the world for the better. And then you're sort of helping them along that process. And I think that's really cool to hear. But I also get the sense that, your path is effectively, it's definitely something that you strive towards. And I think you were there was these opportunities around you. What about those people in sort of, other parts of the world and, those who are probably listening to this right now and who want to sort of be more involved? They don't have to necessarily be part of that group that you just mentioned, but just be more involved. And they're sort of up and coming in their career and they don't really know what they want to do next. And, they want to be in tech. They don't know if they want to be an operator or a VC or whatever it may be. What's sort of some advice that you can give to them about pursuing the path that they need to go?
Yeah, that's a great question. I think my advice, simply put, would be to have as many coffee chats as possible with people in wildly different professions. It is part of the soul searching that I did when I was early early in my career, and I'm still constantly doing. So there's no better way to learn about what someone's day to day is like, or what a professional is like, by asking the individual directly. So reach out cold via LinkedIn. We can share templates about what's been helpful and what I've seen resonate well with people in the past. But I think, spend some face-to-face time, whether in person or virtually, trying to understand, why did this person choose the career? What do they like / dislike about their current role? Where are they aspiring to get to? And see what resonates with you. And then pull consistent themes about what you enjoy hearing from people, and kind of build and construct, well, this would be my ideal role. Where might this fit? And then continue having conversations with people to see, what might be your path.
Great advice. I think everyone's path is different. I know a few people right now who are looking down sort of the barrel of where they want to go, and some of their current roles are not fulfilling. And I think, if you the way it's how you perceive what you're doing. But I think, if you look at venture capital, you look at investing, but you also look at company building. I think it's a trifecta of things that can really help build great companies and great products and services for the world. So I think I hope there's a lot of people out there who are sort of excited to get into this space, because it is definitely something worth considering, especially if you're either up and coming, or if you're an operator / founder and you want to get into VC or vice versa. I think, there's always a lot of flip ups that do happen. And some people feel like they want to sort of transition from one world to the other. So I do appreciate the feedback there. Let us just quickly finish this off with a few other sort of questions, and these are more sort of personal, just to learn a bit more about you as well. What sort of books are you reading right now? You mentioned you're a keen learner and always love to sort of learn about what's happening next. Are you reading anything? Are you listening to any podcasts? What's on your radar at the moment?
Yeah, rapid fire answer this question. There's 2 books that I'm currently reading. One is the Vanderbilt, The Rise and Fall of the American Dynasty by Anderson Cooper. An amazing, well-written story about the Vanderbilt family. And funny enough, I was just in Newport, Rhode Island 2 days ago touring the Breakers itself. So fascinating story, still reading it. I always try to pair nonfiction with a fiction as well to kind of escape the day-to-day world that we're living in. And it's called, the one I just finished is called November 9th by Colleen Hoover. Great fiction story about 2 characters, finding their unique paths and how they intertwine with one another. And then favorite podcast of all time is All In. It's with David Sachs and the crew there. They call themselves the Besties. So every Friday they release an episode, and every Friday morning I'm listening while I, do my morning routine. So those are my 3 favorite pieces of content right now.
That are you sort of agnostic to reading and listening to content, or are you really honed in on trying to learn more about history or learn about sort of investing? Are there any themes that you look for when you look into new content and to read up on?
Yeah, it's a good question. I'd say I go almost in monthly themes. I get a lot of my content from friends who recommend topics. So the Vanderbilt book was actually recommended by a friend, and now it's prompting this deep dive into a history. And so next I have the autobiography of Theodore Roosevelt, and so I'm going to be reading into that. Nothing that I probably would have chosen myself, but from Vanderbilt to that, I'm excited to make that transition. So it comes a lot from recommendations, which I think is the best way to kind of get what you're going to read next.
Yeah, I agree. And it's good to be eclectic in your sort of reading materials, because you start to form sort of connections that you never thought would be related to each other, but then you realize, that kind of might make sense, especially between different themes. So definitely absorbing as much information as you can from different areas of the world and life is really cool. What about sort of your routine, if you have any? I know I'm kind of strict and sort of regimented in the way I live my daily lives, but I'd love to sort of get a sense of how you sort of get up in the morning. What do you do, and how do you sort of become sort of the person that you want to be down the road?
Yeah, I think Yeah, I think it takes a lot of discipline and routines come into play with that. We strive to be the person we want to be, and how we show up each and every day. I wish I was one of those individuals who had a 5 to 9 before the 9 to 5. But I wake up, I hit snooze for like 10 minutes. That's pretty consistent. Try to dream a little bit more. I always try to get some movement in the morning, whether that's, running on the treadmill, getting for a walk outside, riding the Peloton. I'm always consistent with my breakfast. It's pretty much the same thing: eggs and chicken sausage. I don't know if you want this much detail, but that's the breakfast. And then I try to journal for a little bit before I step in front of screens for the day. So the morning's pretty much like no tech time for me. I think, in our respective careers, we spend a lot of time in front of a screen, whether it's talking with people, doing research, catching up on emails. And so I think it's, important to have some dedicated no screen time, whether in the morning or evening.
What's journaling? I've tried to get in journaling myself. It's hard, like especially sitting down to write something. What
Yeah.
does journaling do for you?
It's funny. I had someone just ask me about this, and they were like, "Are you a prompt journaler, or do you just write whatever's on your mind?" And so I think it's, there's different type of journalers. I know some friends who journal, they ask themselves a question every day, and that's, what prompts them to write about that question. And you can use various websites to get those questions. I have so much going on in my head that I just write down what's on my head. And I use journaling almost as like an outlet that's a best friend that doesn't necessarily respond, but it helps me become more and more self-aware, because I'll actually reread journal entries and I'll see my individual self evolve, day to day, month to month, consistent themes that I've been bringing up. And so it just helps me see myself almost from an outside lens. And so, yeah, prompt journaler or writing down whatever's in your head, but it is difficult to stick to it sometimes. So it's helpful to put into your routine.
Do you do it very quick, like is it 5 minutes, 10 minutes? Do you set a time limit?
I try to do it. I try to do it for at least 5 minutes. I usually do it while listening to like this playlist that I have on my phone. But it depends, how much is on my mind that day. Sometimes it's half a page, and sometimes I'm writing for like 3 pages, and I'm like, I only stop because my hand cramps up. But yeah, I think it depends on the day.
That's into it. I know journaling does help. It's just like the consistency part and the
Mm-hmm.
discipline, because sometimes you draw blanks and you're like, what do I write? It's the morning. I've got like other stuff going on, but I
Yeah.
do hear, much like yourself, from friends and colleagues and acquaintances, that journaling, if you do it enough, just like meditation,
Mm-hmm.
you'll start to feel the difference. You'll start to notice that there's definitely some sort of positive benefit to it. So
Yeah.
yeah, maybe that would be the trigger for me to get back into it.
Maybe I'll send you some good prompt questions after this. Then you could be a prompt journaler for a little bit. Because the
I
worst is
will do.
when you feel like you're looking at your journal like someone you don't really want to talk to, and then you're forced to talk to, you're forced to write. So I'll send you some questions.
All right, sounds good. I definitely need accountability there. Finally, I think this is something that I've always been interested in, is technology. I'm very, very technology driven, and I love the advances that are happening right now, especially when it comes to AI, robotics, machine learning, and what have you. So, you know, from not just for cities, but your own personal mandate, what sort of technology and areas or sectors or industries that get you excited right now, and why?
Yeah. Yeah. It's a good question. I think, personally, I'm leaning more and more into the healthcare space, specifically women's health and elderly care. I think for the latter, with an continuously aging population, and in many countries, the elderly population being greater, how can we care for those who once cared for us in the best way possible? Through sickness and through health. There are many tools out there that can be supportive to individuals. And I think, as I mentioned, I come from a healthcare background in my family, having physicians in the family and understanding their day-to-day problems and limitations to be able to have them do the full work that they want to do, which is to care for their patients. How can we use technology to let them give their best to people in need? And so, that's been an area that I've been looking more and more into, and why I'm, excited about it.
Cool. Yeah, definitely a lot of stuff happening in digital healthcare. It's definitely an industry that needs to be disrupted a little bit. I think there's a lot of antiquated processes and a lot of antiquated systems in place. And I think the healthcare system, I think Australia and sort of, those countries, it's improving. But I think there's definitely a lot of, it's ripe for innovation. There's a lot of stuff that can be done through technology, and it's really exciting to see where that goes. But overall, it was great to speak with you, Mia. Great conversation. Hopefully, a lot of people get insights from this today, and put all the links, even including all the books that you're reading and podcasts you're listening to, in the description notes, so that everyone can get access to it. But on that, thanks for joining the podcast.
Yeah, thanks for having me, Bae, and thanks for facilitating this for the group.